Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Wednesday, the 7th September 2022. We had futures up a little bit earlier, and then a Wall Street Journal article came out talking about 75 bips being the move for September from the Fed. Didn't think that'd be a big surprise necessarily. I think the bigger thing was, I think the article went on to suggest, and I haven't read it, but it went on to suggest that the path to 4% Fed funds rate is something that's probably they think is going to happen, is the thought, I think, is the argument they're trying to make. April Fed Fund futures, April 23 are 394 right around now. So it's pretty darn close to 4%. So that would suggest a 50 basis point hike in November as well. So that took a little bit of the steam off. Again, our technical work has suggested that this 3,900 is an area we bounce. The market is just acting so sad and labored right now. It is oversold. We covered, we took off all of our PSQ yesterday. No, we took off all of our SH yesterday. We still have some PSQ on. We still have some volatility, but we've definitely taken profits in that space on the hedges. Just thinking that it's getting a little bit too one-sided here in the near term. Keep your eyes on the high yield space, HYG, JNK. Those things look like they're getting real close to the June lows. Unlike the broader market, they're a lot closer to June lows. Energy continues to act really heavy. USO is going to break the 200-day moving average on the open this morning. That's down just about 3% right now. So that's a little concerning if you've got a ton of energy investments. That could be a pretty quick, furious trade to the downside. In the spirit of optimism and looking ahead, a couple industrial names that we do like, probably our two favorite ones. Honeywell, which is really more of a software company than it ever has been in the past. Obviously, they sell into the aerospace environment, which is still on the rebuild, and so we do like that one. Obviously, it's cyclical, so you've got to be very mindful of that. We do own a little bit of it still. But don't plan on adding to it quite yet. And then the other one we like is Emerson. Emerson does a lot of contract-based work, especially around energy, other infrastructure segments. That space is going nowhere. That's a secular growth area. Just ask California. So we do like that one as well, and we're going to be taking probably a fresh look at that one today, see if we want to start nibbling. But again, it would be little nibbles right now. The risk is obviously significantly lower prices in the broad market, even though I think that we are probably getting a little too one-sided here in the short term. All right, that is it. Have an awesome Wednesday, and NFL kicks off tomorrow night.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.